All bets are off. With the Ukraine being invaded by Russia, you may be wondering how this will affect the US housing market. Buyers and sellers, where are things headed in the United States? And stick around to the end where we will talk about what to do with the one certainty of uncertainty. Hey there. Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers and tenants and landlords navigate these crazy days. And we're here with a big update and not a fun one. Of course, nobody is happy to have to discuss the ramifications of war. And our heart goes out to those who will be suffering and who are suffering right now due to this invasion. This invasion of the Ukraine by Russia certainly throws a big wrench in the housing market 2022. And you could say all bets are off for any of the predictions that were out there before this occurred. We're going to dive into how the invasion by Russia into the Ukraine will affect the US housing market in 2022. But of course, there are big variables. As of this filming, this just occurred. We don't know how local or big this could turn out to be. We don't know how many countries will get involved. We don't know how long this will go on. It could be quick and over and move to relative peace very shortly, or it could drag on. Obviously, another important fact is that this is more of a global economy than ever before. So this war can have a much bigger effect or could end very quickly due to this. How will the Ukraine invasion by Russia affect the US economy? Well, as of right now, we've seen it affect the stock market. Stocks are down. We see that commodities prices for gas and oil are up. We've seen that certain commodities like grains, those prices are up. So what this could lead to is pressure on inflation, and not in a good way, pressure to take it up, unfortunately. So we're already suffering from about 7% inflation, and there's some talk that this could potentially, due to the increase in commodity prices, push us up closer to 10% inflation, which is a big, big number. Additionally, we could see that this adds to material shortages and further disrupts the supply chain across the world. So this could also put pressure on prices as well. So we will see in the short term that prices may increase on goods in the United States and inflation can continue to increase. This dovetails into interest rates. So after the announcement that inflation in the United States was 7%, the Fed agreed that it was time to definitely take the foot off the gas pedal and has been tapering bond buying and will be increasing the Fed funds short-term rate. Usually in a time of war, the Fed is very careful not to pull their foot from the gas pedal and maybe even cut things to reduce the cost of lending. But in this case, because of where inflation is, they cannot do that. In fact, we can see in this quote from the Cleveland Fed president, Loretta Mester says, the implications of the unfolding situation in Ukraine for the median run economic outlook in the US will also be in consideration in determining the appropriate pace for raising interest rates. So it may change the pace, but it doesn't mean they're going to stop. The Fed fund rate was slated to be increased in March, and here's how quickly things change. Only 3 days ago, they were talking about a much larger increase in mid-March of 50 basis points. 3 out of these 4 top stories reflect that. The most recent one shows that they were going to have to adjust their outlook on the market, and that's because of what's happening between Russia and the Ukraine. So things change very quickly in a market like this when we have the uncertainty of the war. As for interest rates, today while shooting this video, they did drop a little bit when the Ukraine was invaded by Russia, but it is likely that they will start to go back up here in the short term. What effect will the war in the Ukraine have on the inventory of homes for sale in the United States? Some things will change and some won't. We don't expect any change in the pace or number of foreclosures that are in the market right now. There's no reason to believe there's any correlation that this war will have an effect on that. There's 2 places where we'll potentially see an effect on inventory, and it will be pressure downward on inventory, and that will be in new homes. If we find that the global supply chain is disrupted yet again, we could find material shortages and cost increases. This could potentially lead to fewer new homes being constructed in the near term. Another possibility is this uncertainty could lead to fewer sellers wanting to put their homes on the market right now until they see what happens. So we may find, while this is supposed to be gearing up for the busy spring buying and selling season, that some sellers will decide to wait. So we may actually see a reduction in inventory due to this uncertainty. The biggest change we expect to see is in demand from buyers, and we've seen this in the past due to uncertainty. At the start of this season of 2022, we've got buyers out there writing offers right now with us, and anecdotally, we've seen fewer multiple offers in the multiple offer situations. Still multiple offers, but just fewer. At this time last year in 2021, you could expect to be competing with 15 to 20 buyers in our area. And in this case, we're only competing with 8 a few weeks ago, and then last week only 5. So again, this is anecdotal, but we're starting to see that in the marketplace. What happens is when we have uncertainty like this, buyers may decide to back off. Certain buyers will say, I am not getting into this market. We don't know where interest rates are headed. We don't know where prices are headed. We don't know. And they will go ahead and move to the sidelines. So what we will probably see is less competition and more of a stabilized market. Now, against this, of course, as I just mentioned, we may see less inventory from sellers due to that same uncertainty. So it may equalize and it may not be evident, but we definitely expect slightly less competition out there. Of course, we do our market updates every 2 weeks on this channel. Make sure you're subscribed. You'll be able to see very quickly in the coming weeks whether there's even less inventory coming or fewer offers being written. It'll definitely start to show in the data in the next few weeks if it's going to have an effect. As for price reductions, I don't expect a huge housing market crash, and I don't expect even a big reduction in prices due to this war. As mentioned, inventory may continue to drop and demand will drop, but not fall off a cliff. There will still be relatively strong demand to the point that they will offset each other and keep prices buoyed up. There may be a softening in the level of appreciation, and in fact, I hope there is. It's been going year over year way too high, way too fast. So this could lead to a case where the price appreciation slows to a more manageable level. But I don't expect a housing market crash, nor do I even expect a reduction in prices due to this war. If we do get to the point where the housing market crashes, it is probably going to be because of much bigger problems. Hopefully things that do not happen to the world economy, and those all hoping and praying for a housing market crash. If that happens due to a war escalating to that size and causing economic issues of that size, you won't be able to buy a home. Cash will be worthless. You won't have financing. Hopefully we don't end up in a global crisis of this magnitude. As mentioned at the beginning, the one certainty in a market like this is uncertainty. So how can you leverage this uncertainty to make money? Because in any market like this, money can be made. For example, we saw the stock market go down. If you had dumped a bunch of money into the stock market when it dropped, you're buying at the low, and theoretically sooner rather than later the market will go back up. What can you do as a buyer in particular to leverage uncertainty out there in the market? So of course, if you're still committed to buying and you're not going to sit on the sidelines, which we understand, it's a scary time, you may not want to jump in, but if you're committed to buying, there are a few things you need to know. In the short term, we may see escrows canceling due to this uncertainty. So be ready for properties that you've written offers on and maybe you weren't the first buyer. There is a chance it will fall out. Buying a property is already emotional enough, and then you add in the extra layer of this uncertainty that the war is bringing, and it could lead to escrows being canceled. So be there, be ready to jump back in, have your agent follow up and see how the escrows are going, because you may find that this is a good opportunity for you to be the hero and save the day and get the property you want. As mentioned before, I do expect less competition in the marketplace. As long as we still get a steady stream of inventory and we have buyers sitting on the sideline, there should be less competition while writing offers. If you're still committed to buying, get get those offers written and get them in. And this could quickly change. If things suddenly start to look rosier, the conflict is over and it looks like things are going back to normal, suddenly those people on the sidelines who've been tracking and watching are going to jump back in. So you have to be ready right now before it's rosy to write those offers and beat them out. Another important point is sellers who are on the market right now or coming to the market may be more motivated to get the deal done sooner rather than later. Because of the uncertainty, they may not want to wait, drag things out, wait for price reductions if they're overpriced, or really long escrows. So be quick in writing your offers. I'd still recommend quick removal of contingencies, shorter escrows, and the other advantage, if with a shorter escrow, is you can get the rate locked in, because we are most likely going to see an increase in rates. Because of inflation, the Fed is going to have to raise the Fed funds rate, and we are going to see that rates are going to have to go up. Let us know in the comments below, are you going to leverage this uncertainty, buyers? Sellers, are you going to wait on the sidelines, or are you going to get your property to the market? And let us know where you think things are headed. Of course, make sure you subscribe to our free weekly email newsletter where we'll keep you updated on what's happening at a global and local level. And check out this next video where we cover an important topic in this housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.